All right. Matt, the mortgage guy here. A quick video on what happens when mortgage rates go up. And I say when mortgage rates go up because I'm a firm believer. I talked about it on a few podcasts this morning that I appeared on. Rates are inevitably going to go up. You pump a bunch of money in the economy. You got stimulus galore. Yes, you're going to see future inflation. You're going to see rates increase. The Fed stops buying billions in mortgage-backed securities. A lot of things point to mortgage rates going up in the future. So I want to talk about not only how does it affect you, the consumer, in your payment, how does it affect how much you qualify for, how it might affect the housing market. So in this video, I'm going to get into it. I've got a spreadsheet in front of me so I can show you real world numbers. Because I know that when I've done YouTube live and things like that, people want to see the real world numbers, right? So I'll dig into this and show you 3%, 4%, 5%, not only how it's going to affect your payment, but then we'll plug in some different numbers to see if you qualify up to a certain amount, how much that's going to decrease your purchase power if that's, say, your ceiling. So without further ado, first and foremost, I just want to show folks, and I know that when I record this and I do a screen share, it might be a little bit fuzzy, it might be hard to read on the screen. So I'll try to do my best. I'm zoomed in quite a bit, but I'll talk through the numbers. So if they're hard to make out, then maybe just hearing it out loud will help. So these are not intended to be mortgage rate quotes. I'm not offering anything. NMLS number 1088993, all that stuff. Just a guy on YouTube, happen to do mortgages, mortgage broker, but this is all for entertainment purposes, right? This column over here, 3%. For all intents and purposes, rates are in this range right now, depending on your credit and down payment. But I'm doing a $500,000 loan with 5% down for my example, because in my area in Sacramento, first time buyers and, entry level type stuff is going to fall in between, 400 and 600,000. So we'll just call it $500,000. You're putting 5% down, 3% interest rate. The mortgage insurance, the property taxes, the homeowner's insurance, this is all pretty good estimates as far as what you're going to pay there. And you know what? The mortgage insurance, I think, was calculated on like a 740 FICO. So let's just go 740. No misleading, all transparency, right? All in payment at 3%, $2,694 a month. So we'll call it $2,700 a month. It's interesting to look at what happens when rates go up 1%. And, the last half of February, we saw rates go up more than 0.5%. So thinking that rates can't go up 1 full percent in a month or two or a quarter or a half a year is wishful thinking. They certainly can. And I think that they will. I'm not saying it's going to happen next week or next month, but I'm saying before 2021 ends, I wouldn't be surprised if we're 3.5, 3.75, and rates have started to increase. The economy's buzzing and people are back to work and businesses are reopened and people are traveling and people are spending money. Inevitably, I think rates go up, right? And so 2,700 to 2,959 at 4%. If rates over the next year or two get to 5%, look at this delta. Look at this spread, $32.41 a month. That's pert near $550 a month difference in payment. Now, no doubt, when I'm talking to people, they've got a number in their head and it's a couple that they're both working and it's their first house. 2,700 might just be, this is the max that we can really fit in our budget. And I'm all for people doing something that's going to be comfortable, right? And they can still travel, they can still enjoy other stuff, and they're not house poor. To tell somebody that they're comfortable at 2,700, that their payment's going to be $3,240, $550 more, is just ludicrous. So here's an interesting thing I did. Let's say that somebody's not only qualified up to 2,700, but just says 2,700 is kind of the max I'm comfortable with. Instead of buying a $500,000 house at a 3% rate, I'm gonna guess here, because now we're in this column B, 420, 2723. We might even have to go lower, 415. Yeah, to get that same payment, we're going from 500 to 415,000. So maybe it's your comfort level. Maybe it's what you qualify for. Maybe based on income versus debts, 2,700 is your max mortgage payment. And now I'm showing you that you're only going to qualify for 415. That transitions nicely into what happens to the real estate market if rates go up like this. And the caveat and what I'm going to say before I say any of that is it depends on lots of other factors. One, supply being a huge one, but also how much and how fast interest rates move is going to have different effects on the market. If they slowly trickle up 3 to 5% and it takes 4 years, it's going to have a smaller impact than if we've got 5% interest rates Q1 of 2022, right? That's, most people would agree, relatively make sense comment, right? So 415 at 5%, you've got somebody, and this is the max they qualify for. Here's your income, here's your debts. 2,700 is the max mortgage payment you can get. All of a sudden, the 500,000 pre-approval goes to a $415,000 pre-approval, and that's the max. What would that do to the housing market? Obviously, that just doesn't halt demand, but it severely diminishes demand, because then all of a sudden you're looking at $500,000 houses, and in my specific market, we'll call it Sacramento, maybe there's 1 million people that could qualify at 500,000. And there's X number of those people that are actively looking, X number of that are going to be submitting offers. If we shrink the number of people that can qualify, that further shrinks the number of people that are actually out there looking and shopping, shrinks the amount of offers being made, shrinks purchase prices, right? And I don't buy into, everybody has their rules, right? For every 1% that rates go up, real estate prices go down by 10%. I just don't, it just doesn't work. You know, you can tie stats together however you want to make things make sense. But like historically, you can look back, and every time that rates went down 1%, it didn't mean a 10% change to home prices. Sometimes it meant more. Sometimes it meant less. And there's plenty of flat real estate price appreciation periods over the last 10 years where rates were going down and prices were staying flat or going up 3%. So I don't know. I'm not a firm believer in it's always this way, or this is a for sure type of thing. So anyhow, that's just a little bit of breakdown. If you've got any interest and you want to see this sheet and mess with it, shoot me an email, Matt, M-A-T-T at mattthemortgageguy.com. In the subject line, put interest rate changes sheet, and I'll send it over. One of these days, I'm going to figure out how to just put it as a page on my website and have it be a tool, but I'm not very techy. Before I end the video, though, let's get really crazy. 6.5% interest. Oh my gosh. Exactly $1,000 more. This was not planned. I just was like, let me go wild. Back to the first interest rate I had on my house when me and my wife bought in 2006. 6.5% first and a 12% second. Payment would be $1,000 more expensive. Imagine what that would do to demand. And there's no way. I mean, I might not see 6.5% rates ever again in my career, but it's just fun stuff to kind of mess with. And then you see that you have to go down even further. Let's try to get to 2694. It's going to be like 365 maybe. Yep. 365,000. So your purchasing power goes down by 27, 28%, something like that, when rates go up like that. But let's not get too crazy. I don't see them going up that much, but 4%, 5%, certainly a possibility. And no doubt it'll have an effect on the housing market, probably a relatively good one, because the housing market needs a little bit, a couple fire hoses at least on this hot housing market we have. So time will tell. Just wanted to do some real life examples, show you guys what that looks like: 3%, 4%, 5%, and also the example like I showed about what it does to your purchase power. Being able to buy 500 with that same payment, and then we went down to 415, which is rough math, 17% reduction in your purchasing power, which is a lot, right? All right. Hopefully this was helpful. Thanks for watching. If you have any questions at all, Matt, M-A-T-T at mattthemortgageguy.com. In the description of this video, I'm going to have a link. If you're outside of California and need help with your mortgage, fill out this form. We'll get you connected with a great broker. Thanks for watching.